So in the last video, we talked about how a cash flow statement is set up. In this video, we're actually going to perform the calculations that go into a cash flow. And as you can see, we have the cash flow statement right here on this Google Sheets, where it says cash flow statement, the name of the operation, where it says fiscal year ended December 2017, saying that this is for the 2017 operating year. It talks about the operating activities and the revenue from the operating activities. You see, we already have those in place. Expenses from operating activities, all of those are currently in place. We have the net cash flow from operating activities. We have the same thing set up under investing activities for revenue, expenses, financial activities, revenue, expenses, and then all this down here to the bottom, talking about the net increase in cash, beginning cash, and ending cash. Then down here we also have the 2018 operating loan need, which we'll discuss later as we talk about an if-then statement. So now that we have this already set up, I'm just going to go ahead and enter in the numbers. First thing we need to do is we need to enter in the calculation for the corn crop. And now I'm pulling out all these numbers off of this little sheet over here. We're talking about the corn crop being 1,000 acres times 125 bushels per acre times $3.20 per bushel. Then we need to do the same thing for the soybean crop. We have 500 acres times 65 bushels per acre times $4.25 per bushel. So that adds up the total amount of receipts then we can add up the total amount of receipts, saying equals sum. Highlight these two, and now we have the total receipts from operating activities. Now whenever you're doing these calculations on your own deal, you're actually going to be dealing with animals, to where you might be talking about weaning weight, number of head, meaning the total number of animals, and then also a price per CWT. That means price per hundredweight. So let's say the price per hundredweight is $125 per hundredweight. And what that means is that is $125 per 100 pounds. So when this says per 1 CWT, it means per 100 pounds. So it might say something like 500 head, weaning weight of say 550. Well, whenever you go to calculate this, you'll do equals 550 times the number of head times, now this part is where you need to pay attention. We'll actually do open parenthesis, price per head divided by 100, or sorry, price per pound, 100 pounds divided by 100, and that gives us the price per pound. And that's actually how you would calculate something like livestock whenever you're dealing with a price per 100 weight. So now we have these total receipts. We need to go ahead and enter in our operating activity expenses. So we have labor of 90,000, fertilizer bill of 125,000. We have fuel of again 90,000, seed bill of 100,000. Income taxes is 15,800, and that is 2016's income taxes, meaning these are the income taxes from the previous year, because if you remember and you look at the date, we're operating in 2017, so we take the 2016 tax bill and pay it in 2017. Then we have this interest expense. Now we don't see that interest expense is evident right here, and that's because we have to calculate it. But we can't really calculate it just yet. We don't have quite all the information. So what we're going to do is we're going to click on this cell. We're going to come up here to more. We're going to click on this little paint can. If you had a full screen where everything was already on the screen, then you wouldn't have to go to more. But because we have it shrunk, you have to come right here to more, go to that paint can, and we're going to highlight it yellow for now. That's just saying, hey, we need to come back to it because we haven't calculated it just yet. So hopefully we don't forget about it. We're going to say equals sum, because now we need to add up the total operating expenses. Now this part is very important. We need to highlight everything, including the interest expense. Because if you forget to include the interest expense, your numbers are going to be off. So make sure you include that interest expense when you're adding up the total expenses. So now that we have that done, we need to say, all right, the net cash flow from operating activities is going to be equal to the receipts from operating activities minus the total expenses from operating activities. Now that part is very important as well. You need to make sure that whenever you're doing these net cash flows, it is always going to be the receipts minus the expenses. Even if it gives you a negative number, it is still receipts minus expenses. So now we have a net cash flow from operating activities, meaning that in our operating activities we made $117,000 more than what we spent for that particular year. Doesn't necessarily mean that we're profitable overall. It just means we spent less on normal operating activities than we did bringing in revenue. So we get on into investing activities, and we're talking about selling a tractor and selling bonds. Both of those are assets to the farm or ranch. The tractor would be an asset in this farm. So therefore it goes under investing activities, whether we are dealing with assets. So a tractor, the sale of the tractor, if we look right here, is $12,500. We sell some bonds as well. That's a financial asset, so that goes in the investing activities. So that's $3,000. Then again, we need to calculate these total receipts. So that's going to be equal sum. And you're just going to highlight those two cells. So now we need to do the same thing for expenses, only the interest expense, or the investing expenses, I'm sorry. So stuff like land, tractors, a replacement fertilizer tank, replacement breeding livestock, something like a replacement bulls, those are all going to be considered investing activities because those are assets to the farm or ranch. That would be an investment into the farm or ranch. Something like a bull, a breeding bull, is an investment. So that goes under these investing activities. Land and equipment is the same way, as well as repairs and equipment maintenance is all the same thing. It's all cash paid towards investments. So if we look down here, the land payment is $35,000. Tractor payment, I believe, is going to be $12,100. The replacement fertilizer tank, and that's an investment, is $12,000. Property repairs, or this fence line repairs, is going to be $1,000. And then this equipment repairs is equal to $37,000. Just like before, we're going to calculate these total expenses. Again, that's going to equal sum, open parenthesis, highlight all of these expenses. You want to make sure you get them all. Press enter. And now we have a total expenses. So now we need to calculate the net cash flow from investing activities. Again, just like before, we're going to say total receipts minus total expenses. We come up with a negative $81,000. We need to go ahead and calculate this 2017 operating loan. And if we look up here, the 2017 operating loan is a revenue because we are receiving cash that year, and that's actually equal to 0. Now that is the only revenue under financial activities, because financial activities are often dealing with loans for operating, or loans other than loans for assets. So in this case, the operating loan is going to be the only revenue stream for these financial activities. So again, we want to say equals sum. Click on that cell, close parenthesis. Now it would be just as easy, actually it would be easier, rather than doing on these total receipts, say equals sum, open parenthesis, click on the cell, close parenthesis. It would be easier just to type in a 0. So instead of typing in that formula, it'd be just as easy to type in 0. And you might think that'd be acceptable simply because, well, both of them are 0. Well, as we're doing this, I do not want you to type in something like total receipts just the number. I want you to actually type in the formula. And I'll show you why. Let's say, for example, we get these numbers wrong. And this is no longer, say, 0. It's now 10,000. This will automatically update. But if we just typed in a 0 there, then it won't update anymore. But if we say equals sum, actually we're going to make this a number real quick. But if we say equals sum of that cell, it will actually update it. So we definitely want to make sure that we cell reference that. We need to look at the 2016 operating loan. We see that the 2016 operating loan was $62,000. Again, we need to do equals sum to find the total expenses. Now, was that the only cost associated with that 2016 operating loan? So you took out a loan in 2016, you have to pay it back in 2017, so therefore it's an expense on those financial activities. But that's not the only expense associated with it. You also have an interest expense. You can see right here I have this interest rate. That interest expense actually comes back up here in this cell that we never filled in. And we're going to assume that this loan, and for your assignment, that these loans are taken out for a full year and amortized annually. We're going to make those assumptions in order to make it easy to calculate. So we're assuming it's taken out for a full year and amortized annually. And since we can say that, we can say equals the value of that loan, make sure you cell reference that, times the rate, the interest rate. So in this case, it was 10%. It might be, say, 5% on your assignment, or it might be 7% on your assignment. But in this case, we're just using 10% as an example. So now we can see that's automatically calculated. We're going to reset that cell because we don't need to come back to it anymore. And because we already plugged in all the formulas correctly, that $62,000 that we just added is already calculated. And that was done by taking the value of the loan times the interest rate. And now as we continue, we need to go ahead and find the net cash flow from financial activities, which again is total receipts minus total expenses. Then we want to find the net increase in cash. Now the net increase in cash, as you should remember from the last video, is equal to the net cash flow from operating activities, this $11,000, plus this net cash flow from investing activities, plus this net cash flow from financial activities. Meaning that this particular farm or ranch spent $32,000 more in cash this year than what it brought in. So then if we look over here, we say, all right, the beginning cash is $100,000. That's how much we had in the checking account when we started. So we had $100,000, and we wound up spending $32,000 more than what we made. So what does that come out of? Well, it comes out of beginning cash. So that's actually going to equal to the beginning cash plus this net increase in cash. Now if this number would be positive, that ending cash would increase. But since it's negative, it's actually going to decrease. So that pretty much includes how you set this up and how you calculate all this. Now there's one more thing you're going to have to do, and we're going to show you that in the next video. And that is calculating an if-then statement to figure out if you need more money in the form of an operating loan.